are here on Real Estate in the Lowcountry. With me now is Meg Herman, and she is, of course, with Goosehead Insurance. And we have a lot to talk about today, as we always do. But our word for today is nimble. And we're going to stay that way in this insurance market that we're in right now. Talk to us a little bit about that.
Yeah, nimble is a great word. I know that the idea of changing your homeowner's insurance is on everyone's mind.
Right.
You know, we're talking to our clients every day about what's the absolute best place for them to be this year. And then I really see that there's gonna be a lot of changes to the carriers that are available in next year and beyond.
Right.
We're gonna be moving again. So the coastal property insurance market is a place where we have to stay nimble.
Yes.
For sure.
Yeah.
A couple of big things I see when you're considering the idea of moving your insurance. Always remember, keep in mind all the things that you're covering. Jewelry schedules, collections, artwork. These are sometimes a part of your homeowners program. And then oftentimes people have their golf cart wrapped up in their homeowners program. You want to make sure that those are well taken care of. And I really like the idea of putting them on their own policy.
Okay.
And one of the reasons why is claims. Also, we won't forget about them if they're on their own policy.
Right.
But if you have a jewelry claim, it's going to affect your homeowners if it's on your homeowner's insurance. If you have a golf cart claim, it's going to affect your homeowners if it's on your homeowner's policy.
Right.
And we're trying to stay nimble, and claims count.
Sure.
Claims are a
obviously,
thing.
if you have high number of claims, that's going to make you a lot less desirable.
Right. So claims can stay with you for like 5+ years.
Okay.
So I think those separate policies are a great thing to have. Number one, those companies, that's all they do.
Right.
And they're going to be done right, and there's very little chance that we're going to have anything get lost in the movement from one company to another.
Yeah.
So that's a big deal. And then claims in general, if you do have them, keep track of what happened.
Right.
Make sure that you've got good documentation as to how the claim was handled and what was covered and what was fixed and that it's closed.
Most importantly, probably almost that it's closed, right?
Right.
Because somebody's not going to take you if you've got something hanging out over
most
here.
insurance companies aren't real excited about getting onto a new policy when
Sure.
there's an outstanding claim.
Sure.
So that's an important thing to think about as well.
Yeah. And also, when we're talking about moving policies, something that does have to happen is an inspection. So what are some things, some red flags that you might want to take a look at before you have that inspection so that you're more desirable to an insurance company?
Right. The inspections are a real thing here. Get them scheduled once you've got a new policy. Talk with your agent about what's the process? Are we doing an inspection that we do ourselves with like a self-inspection, or is someone coming out to the house? Do I need to have it scheduled? And then they might find things, and those things have to be fixed or cured in order for the insurance company to stay on the policy. Things like polybutylene plumbing come up. Do you know about that already? Your roof may or may not be in the condition that they're looking for. Are trees overhanging the roof? Are the railings stable? Are they there? So all of these things can come up. So I always tell people, get the inspection done as soon as possible and sort of be prepared to look out for those things that might need to be fixed or cured or made reasonable for the insurance company.
And because right now, because we're in a hard market like we've talked about before, there are less insurers here to choose from. So they can be a lot pickier with who they...
That's a great word.
Yeah.
Picky.
They're picky.
They're very picky. We call that changing the guidelines. You know, maybe last year they took polybutylene, this year they don't. You know, carriers basically have a line. It's a seller's market, right? In real estate, sort of the same thing that's happening in a hard market, consolidated market in insurance. You know, the insurance company can say, you know, we really want a 15-year roof. And that's their new guideline.
Right.
So it's possible that your 16-year-old roof, you know, even though it's working fine, might not be eligible for a certain company. So bear in mind the true definition of a hard market is consolidated group of insurance companies willing to take the risk. More stringent guidelines.
Yeah. So before we started filming, though, you said you wish you had a crystal ball. You don't, but you're thinking, we got about 30 seconds left. You're thinking, though, that maybe some point in 2024, we may see some people coming back into our market.
Yeah, we hope that's the crystal ball is on my Christmas list.
Yeah.
Hope to get one. But, you know, hard markets do end, and we are starting to see glimmers of hope. You know, the big reinsurers are starting to see some profitability, and that leads to you know, a more attractive environment for insurers. So stay nimble, right?
So I was going to say, stay nimble, because you might want to
stay in touch with
yeah.
your insurance agent so that you can find out who is available, and the market will change.
Excellent. Well, thank you so much, Meg. It's always fascinating information when you're here.
It's great to be here.
Thanks.
Thank you.